Here we are. Hi, friends.
Hello.
We are here today with my friend Steve Lee, Academy Mortgage, up here in Summerlin. It's a nice office.
Thank you.
You just got here, huh?
Just got here. Just gotta, kind of spruce it up a little bit. But yeah,
I love
it's
it.
a great location. I get great energy here. So this is my new home.
I love it. I love it. Well, Steve, how long you been in business?
I've been in business for 18 years.
18 years.
All in Las Vegas.
Yeah. 18 years. So we kind of run in the same real estate circles, but got a chance to sit down with Steve a couple months ago at the military training certification class. And what a great class.
It's an amazing class, and that's something everyone should go, lenders, realtors, because it's stuff that maybe you've forgotten, changes that has happened, and there's some changes that we're going to talk about today for 2020. So we want to make sure we give you some updated information on VA.
Yeah.
So that was kind of our thought, right? While we're sitting in class, learning all that, it's like, we need to share this stuff.
Yeah, it's really important. Hey, before we get going, Bobby and Brian, can you hear us? Just want to make sure. I've sat through 30 minutes of a video before, and the audio wasn't working. So I just want to make sure you guys can hear us. Make a comment. Make sure that
thumbs up or something.
Thumbs up. Yeah, so we took this certification, and we're both members of the Veterans Association of Real Estate Professionals here locally in Las Vegas, and
which is a great organization. If you're not a member, don't know about them, definitely reach out to us, and we'll point you in the right direction.
Yeah.
But we need to be here to help service our veterans and our active military personnel. They're here. They're making sacrifices. We are here because of our military.
Did you serve in the military?
I didn't, but my father-in-law has, my stepfather has, so
yeah. My family as well. Yeah. So it's important to me. It touches my heart, and we got to do this year, last month, a couple weeks ago.
Yep.
Christmas Eve, we got to deliver a bunch of gifts for veterans' families, and that was so special.
Yeah. 10 families that were in need.
Yeah. That was very special. Actually, I just, on my way here, stopped at one of the family's house. There were some gifts that were ordered that didn't come from Amazon till just now. So I just stopped by one of the houses and saw one of the young men. So it was very nice. So
it's better late than never, right?
Yeah, and I made them a little gift certificate, so they knew that it was coming. But
okay, cool.
Anyways. Hey, hi Megan, Andrew. Hey, can you guys make sure that you can hear us? Can you post a little thumbs up down there so that we know that you can hear us before we dump all this information on you. Anyway, so so at Terry Ann, can you hear us? Can you hear us? Okay, Andrew.
We're good? Andrew, thanks,
Sometimes
Andrew.
I get through half of a video and realize that nobody could hear. All right. So we got to deliver a bunch of gifts for our veterans in our community. And, it's so important so many times, not only for VA loans, for all kinds of loans. Clients will come to us, and the lending piece of it it's confusing to the average consumer. And yes. I wanted to sit down with Steve to talk about specifically VA loans today, because there is something, and I know over 15 years of selling real estate, there's something that people, as a listing agent, wouldn't accept. They'd say,
VA buyers.
don't take a VA buyer's loan or offer, because
or they won't post it. On the listing, they won't show as accepting VA buyers,
which can turn away a lot of potential buyers with a really good solid loan to buy your property as a seller. And so and we talked about that in the military training class.
Yeah, and there's truly no difference between someone getting a FHA loan or conventional loan or VA. They all have their risk to it. I think one of the misconceptions was, they're worried about appraisals. And I think one of the problems used to be is on VAs, you have to order the appraisal straight through the VA portal. You don't go through an AMC like FHA and conventional. So you actually go through VA. And up until not too long ago, the VA appraisers had up to 10 business days. Once they actually accept that order from VA, they have up to 10 business days to get that order done. And the thing is that you can't order a rush on a VA loan. You can't ask for updates. So that's maybe some of the frustrations part of it. But overall, value-wise and everything, you know, you're going to get the same value on a conventional loan, FHA, and VA loan. You know, but you know, before they had a small handful of appraisers that were on that panel for VA forever. So last year they did kind of change it up a little bit, add some new blood, add some more people on it. So right now I believe the VA turn time is down to 7 business days versus 10. So definitely, you know, don't worry about the VA appraisals being an issue. But at the end of the day, I mean, they're typically good, solid borrowers. You know, zero down, and most lenders that know how to do VA loans, those could close in 30 days or even less.
Yeah.
You know, and that's one of the other misconceptions is they think it takes long time to close a VA deal.
For sure.
I mean, we could go down to credit score lows 580 on a VA, and if we can't get a fully automated approval, we could actually do a manual underwrite at 600 credit score. But you know, those credit score requirements differ from lender to lender, so that's one thing you need to definitely shop around when you do have a VA borrower. But
and so that was another question: is that interest rates are higher on a VA loan versus the other types of loans, and that's not true necessarily.
That's not true at all. And the things, if you're comparing like conventional loan to VA borrower, typically on a VA borrower, if you have a 620 or 640 credit score, you're gonna get the same interest rate as if you had 850 credit score. Compared to if you have a conventional borrower, the interest rate is dictated by your credit score. 760 is gonna get you the best interest rate, and then it goes in tiers of like 20. So definitely VA is a very good option, you know, and interest rates are very competitive. The other thing I want to bring up is one is the Tidewater Initiative. A lot of agents may or may not know what that means. Basically what it is once the VA appraiser accepts that order for that property and he starts putting together his data, and if he deems that the value is going to come in more than likely below the contract price, it could be $50 or $10,000. Long as he thinks it's going to be under that contract price, he's going to initiate the Tidewater Initiative to the lender. And once the lender gets that, he's going to pass it on to the listing agent or the buyer's agent or both of them. Basically, they have 48 hours to respond back with either comps or details on how they came to that price. So then that could be added to how he formulates the final value of the home. So it's kind of, the Tidewater Initiative, it's kind of like a backward version of FHA or conventional, where if the value comes in low after the appraisal is done, then you could ask for value. So the Tidewater Initiative is similar to that, except they do it in the beginning. Because on a VA appraisal, once the appraisal is done, it's pretty much done. I mean, you could try to fight it, but that's a long, you know, it could take months, you know, for that, or never happen. So they give the opportunity in the beginning versus after the fact.
Yeah.
So.
And I think it's important as a real estate agent to be in good partnership and communication with the lender. Now, I have my lenders that I love, that I use, but sometimes buyers come and have their own people. No matter if that's someone that I don't know, it's really important for a buyer to pick a professional realtor and or lender that is in partnership with or willing to get into partnership with the other person in the transaction, the lender and the realtor. It's really important for us to communicate about what do you need? How do I need to write up this contract? If there's whatever it looks like. Hey, I know the price is it's overpriced. This is what's going on with the house. Like, let's get in good communication so that when these things happen, we're on the same page. We know where to go with it.
Yeah. And talk about overpriced. So if the VA appraisal comes in lower, sometimes people think you can't purchase that property. But as long as the veteran's aware they're paying above what the house is worth. For instance, if they get a contract for $200,000 and the value comes in at $190,000, and seller's not going to reduce the price, but the veteran really wants that home, you could still get that home. But the thing is that it's going to be 100% financing based on the appraised value, which is $190,000. The other $10,000 that's over, the veteran has to come in with that. So long as they understand that they have to come in with the difference, you could still do the VA loan on a home where the appraised value came in lower.
Yeah, there's lots of ways to get it done. So interesting. Okay, we talked about that. Let's talk about the VA funding fee and what is that? When does it get paid? What does that look like?
Okay. So one is for VA funding fees. There's actually changes as of 2020. The funding fee has increased. So what it is on a VA funding fee for a veteran that's using it for their first time, the funding fee is calculated at 2.3% of the balance. It was 2.15. Now, as of 2020, it's 2.30. And if you've used your VA loan before, they call it subsequent use. Then it is now at 3.6% versus 3.3 prior. And basically, the funding fee is a fee that you pay. It is considered part of your closing cost, but that funding fee, the veteran could either pay that at closing, or you could actually add that into the loan. So, for example, if you have a loan for $100,000 and the funding fee was 2.3, the funding fee is $2,300. So you could either pay that $2,300 at closing, or we could add that on top of your loan. So your loan balance when you close would be $102,300. So it could be financed or paid. Typically, most people finance it. It doesn't make a huge difference on your monthly payment, but
yeah, but if you get seller to pay towards your closing costs, you get seller to pay it, right? So make sure you are aware of that, and when you're getting as a veteran getting a VA loan, make sure you're aware. Am I financing it, or just be aware, because so many times, and not just VA loans. Again, it's just consumers are confused about the loan process. So that's important. So. And just to be clear on what you said, subsequent use of the VA loan, meaning my dad used his VA loan in 1980, sold that house in 1990, and now buys a house today, it would be a subsequent use.
Correct.
It's not concurrent.
No, it doesn't matter if it's been a long time in between.
Okay.
The first time use is that low rate. Anything after that, it's called subsequent use, and it's at 3.6%.
And who keeps track of that? The VA?
VA does. Basically, what we'll do is we'll order what is called certificate of eligibility from VA, and it'll tell us how much they have entitlement, and if it's going to be a subsequent use if they used it before.
Oh, that's on there.
And
okay.
So that's something you definitely should have when you have a lender pre-qualified, pre-approve your buyer. Next question is did you verify that he has full entitlement or if he's eligible? Because there's at times where the veterans had a house and there may have been some kind of issue with the house that they had previously, and they had no idea what really happened to it, and they think that their entitlement was restored, and it may not have. So, instead of waiting until they get in contract and then you order it and then find out there's an issue with it, make sure, with the pre-approval, you want to make sure, because typically 99% of the time lenders could pull that offline, so it doesn't take that long. The only time it takes long is when they can't get that online. Then we've got to actually have the veteran fill out a form, and then we've got to send it to VA. So, that's a question you want to make sure you ask.
So certificate of eligibility, can a veteran get his own?
He can.
Is that something like he should get? Maybe you're thinking about buying a house in 6 months, get your DD 214 and your certificate of eligibility, just to have, so they're ready, and so they can get that online.
So some of the savvy, VA borrowers, they're aware of it, so they do get it, so they could order it themselves. And I had some of them come and bring that with all their documents, my COE.
Okay.
So yeah, they definitely can do that if they want to make sure before they even start the process, they could order that.
That's good to know. We talked a little bit about VA appraisals. Some of the appraisals that is often heard is they're stricter as far as repairs for the seller. The seller's got to take care of XYZ more than versus a FHA or conventional loan.
There's a little bit more on the condition of the home, but it's not, in most cases, I haven't seen any that really, affects the appraisal. But there's, every loan, FHA, conventional, VA, they have their own little requirements on the condition, how it's supposed to look. But overall, it's not. One thing, though, you do need is, on a VA borrowers, you need to get a termite inspection.
Yeah.
So that's not an option. It's required by VA, and the veteran can't pay for that termite inspection. So seller or someone else would have to pay that, but termite inspection is required.
Yeah, and those are super cheap, like $79 or something.
Yeah, they're cheap.
And so if it's a deal breaker, maybe your realtor or your lender can help make the deal get done if that's a deal breaker.
And some of the inspection companies like Crispy Critters, they'll actually invoice it, so they don't collect it in the beginning. So if the seller don't have the funds to do it, but they could do it out of the proceeds out of the sale of the home.
It's a lot of ways to make it easy.
So there's ways to make it, but the veteran can't pay for that.
Well, another question I had was about the veteran can't pay for. There was a couple other. What else can the veteran not pay for on a VA offer that's put in on a listing?
There's a few non-allowables that's on there, so that's something. If you need, that's something you could get from a lender. There's a list of non-allowables. I don't want to bark to it, but like dock fees and storage fees, things that aren't typical, you can't charge a veteran. So in the heydays where we had short sales and stuff like attorney fees and stuff like that, VA won't allow veteran to pay or be charged those fees.
Sure, certain fees, but the seller doesn't have to pay those for
seller could pay them.
Seller, or those fees just don't get charged at all, or the seller asks to pay for those fees.
Seller would have to pay for it.
Okay.
Yeah, as long as the veteran doesn't pay for it, it's fine.
Okay. So again, a good way also to do it would be to submit. If I was a buyer's agent, submit the offer.
Mm-hmm.
And I often, a lot of times when I'm working with a VA buyer, the listing agents, we will have a conversation, and the listing agents 99% of the time they're not sure. First of all, they usually say they're not going to accept a VA offer.
Mm-hmm.
I call them and say, I got an offer for you. It's VA. Submit it anyway. And they're concerned that their seller's going to have to pay a crazy amount of fees, a bunch of appraisal conditions for repairs, and it's just not true.
No, I mean, I think if on a $250,000 sale price, if you're looking at non-allowable fees, it's going to be under $1,000. So it's not ginormous amount. And the one thing is, if the seller's like giving credit towards closing costs, then the seller's credit could cover those fees. So it's not, we can't put it on the HUD.
Yeah.
I mean, you can't waive everyone's fees because it's not allowable for VA. So it'll be on there, just the veteran can't pay those fees. So the lender could pay him, the seller could pay him. So there's ways, to make sure, those fees are covered. So it just non-allowable means that you can't charge it, but it just veteran can't pay it. That's
so
all
a great way to do it would just be to get the listing agent on the phone with you. Hey, I submitted an offer. Talk to my lender so that my lender can completely make sure we're all on the same page around, it's a win for everybody. What were some of the other things? Oh, the entitlement? We
talked about entitlement. Another great news for 2020. So VA typically for 100% financing, it fits the conforming loan amount, which is right now $510,400. So typically the 100% financing is up to that conforming loan limit. But as of 2020, VA no longer follows the conforming loan limit. So long as they have full entitlement, they could buy a house for $1 million and no down payment. Prior to, if you pay over the $510,400, which is the conforming limit, and say you bought a house for $610,400, so you're paying $100,000 over, typically you got to come in with 25% of that difference to closing. So the $100,000 times 25%, so you got to bring in $25,000 to buy a house for $610,400, which still isn't bad, but now they could get 100% financing.
Yeah, it's amazing. That's awesome. That's a good one.
Yeah.
James, I've worked with Kristen's VA buyer on a listing, and we closed without a hitch, and everyone won. It's so true. And James, you're a veteran too, I believe. Thank you for your service. Yeah, that was a good one. And by the way, I think you sent me a cookie basket or something,
nice.
a bundt cake. The listing agent
really?
sent me.
No way. You did a great job.
No, I think, yeah. I can't remember. Something along those lines. Anyway, the VA loans are such a great product, and like any loan product, it really is dependent on the needs and the wants and the criteria of the particular buyer. I mean, if we do have, someone had mentioned earlier today on the post that I made something about, if they have money to put down, it may be better for them to go with a non-VA loan.
Yeah. You got to compare. So that's one thing. If you're looking at doing low down payment or zero down, then VA is absolutely the best loan to do. But if you have a big chunk of change, now you need a lender to kind of give you the comparison. If you do conventional loan with 10% down what's it going to cost you, what's that going to look like, versus VA with 10% down. And also with VA, if you do 10% down, the funding fee goes from 2.3% to 1.4%. And then if it's a subsequent use, it goes to also 1.4%. So one is, depending on down payment, it lowers that funding fee.
Yeah.
So, and a lot of times people don't understand that they do put a 5 or 10% down. It does change that. People think it's the regular rate of 2.3 or 3.6
across the board.
But it does make a difference if they do have down payment.
And as a lender, you will give a potential buyer the breakdown of a bunch of different loan products, right?
Yes.
Depending on their long-term needs and wants and goals and their credit scores. There's a lot of variables to it, but make sure you're choosing a team and professionals, your realtor, your lender professionals that really have asked you enough questions about what it is your long-term goals are, all the things. I mean, an investor is not going to get the same type of loan necessarily that a primary resident buyer will get, and definitely not a VA loan, because VA loans are for your primary resident.
And let me add something too. Also, and I think a lot of times, lenders or agents forget to ask the question if they're maybe in the military to see if they qualify for a VA loan, because sometimes the veterans or people that are inactive, they don't know about VA loans. They don't know what a great loan that is, and they have no idea. So I know VA reps been working on this, and they're getting a thing added on the application where it asks, did you serve in the military?
Yeah, instead of, are you a veteran?
Yeah.
I heard them talking about that. That was a good one. And just because you were not honorably discharged does not mean you do not qualify, because there's other types of discharge.
Yeah.
I learned that in the class. I didn't know that. I did not understand that. So that was very interesting. And you still can qualify for a VA loan even though you were not honorably discharged. There's a bunch of other categories of discharge.
Yeah, there's exceptions to the rule.
Exceptions to the rule, there is, but that's why you got to get with someone that knows the questions to ask, so that we know what you qualify for. This is an incredible benefit for our veterans that have served our country. They earned this.
Yeah, they did.
And
definitely.
for us to be able to help them navigate the process, it's really important. So.
And there's another question that comes up here and there is, sometimes if the veterans passed away, can the surviving spouse, take advantage of the VA loan?
Yeah.
The way they could do it, the only time the surviving spouse could use the VA is if the spouse passed away due to a service-related incident, and that's what caused their death. Then the surviving spouse can. But if it's not service, they won't be able to use that.
Yeah, that's a great point. Is it surviving spouse and children?
I'm not sure about, because I think it's just a spouse, but
Okay.
I could double check for you.
Okay. If the spouse had passed, I thought it was. We'll have to look into
I'm
that.
not sure about the kids' dependents you're talking about, right?
Yeah. I think that's mostly all of the questions we had gone over. Was there anything else that you had notes on that we?
Yeah. Look, this is another great snippet about VA loans. So, different loans require different seasoning time when you have a bankruptcy, foreclosure, or short sale. Like, for instance, convention loan, on a standard rule, it's 4 years after bankruptcy, 7 years after foreclosure. FHA is 2 years after bankruptcy, 3 years after foreclosure. VA only requires 2 years after bankruptcy, 2 years after foreclosure, and 2 years after short sale. So that's really not that long of a time. I mean, time goes by super fast. So 2 years.
2 years, yeah.
So and
just getting back on your feet.
And not just veterans, but people always I think that once they had a foreclosure, that they're just like done. You can't ever get another mortgage again.
Hey, we all went through it.
Yeah.
When the crash happened, everybody went through it, and it was a hard time. But just because you went through that does not mean you cannot own a home again. There are so many products out there. I recently had a veteran able to purchase a property with the Heroes program, and we used that to buy down his rate.
Yeah.
Oh, he got a smoking deal. It was in this beautiful home, and he was just so excited about it. But yeah, that's a great program too. So tell us about what the Heroes program is.
That's with Home is Possible with Nevada Housing Division. So what they do is they give you below market interest rate on that program. So it's a great tool because you don't need help with down payment because it's zero down.
Yeah.
So they give you a great rate. And closing wise, you still have to pay the closing because I think they used to give them a little bit of money, but I'm not sure if they give them money anymore.
I think you use it towards the down payment or the rate.
Yeah.
You use the money towards the rate. We opted to use it towards the rate because he wanted his payment in a certain box, of course, but wanted a house this much, but wanted this payment here. And so yeah, that he was so happy. So there's that option too.
Yep. And then also student loans. Student loans is a big deal, with different type of loans. A lot of people can't qualify for a loan because they have student loans. So on VA, the way student loans work is, one is if they're deferred for 12 months from the note date. The note date is typically happens after the loan's approved, when you're ready to go to closing, when they draw the loan documents. The note date, long as it's student loans are deferred over 12 months from the note date, we don't have to hit them with the debt of the student loan. Where a lot of the other loans, you got to hit them with either what's on the credit report or a percentage of the balance, and you calculate a monthly payment to hit them against it. So
really,
yeah,
you don't have to calculate that into the debt to income.
No, not if it's deferred for 12 months from the note date, or if it isn't, or the deferment is less than 12 months, then it's a lot less than any other loan. It's basically whatever your balance is, your total balance of the student loans, at 5% divided by 12. That's what you're gonna be. That's the number that's gonna be included as your monthly debt. So a lot of times, I mean, you talk about for instance, if you have $10,000 at 5%, that's what is it? $500 at 5%. Am I doing that number wrong? Yeah. So divide by 12.
You're the numbers
it's a lot less. So student loans aren't that much of a hamper on
a VA loan. That's
versus
good.
any other loans.
Oh, that's good to know. I didn't know that.
Student loans, and then you got your refinances, which they call a VA IRL. So one is, long as you've had the loan for at least 210 days, you could refinance it as long as you've been making your payments on time. There's no appraisal required. There's no income to verify. It's based on your payment history, and long as there's a benefit to the veteran, why they refund their payments being lowered, then you could do that VA IRL, and it's
that's awesome.
Very easy, yeah.
So that's not called a streamlined VA. That's a
VA IRL.
VA IRL.
Yeah.
And on that, the 210 days, is that from the time they make their first payment?
Correct.
Because typically there's a month or so that between. So the time they make their first payment, that 210 days starts.
Then they could do that. So typically, a lot of people think you got to wait a whole year. You don't have to wait a whole year to do it. If the market's dropped, rates got much better and it makes sense, then you could do it in under a year, and basically as long as you've been making your payment on time.
That's great.
It's very easy.
Especially if the rates have gone down.
Yeah.
I mean, and rates have been amazing.
Yeah.
I love that. And exemption for the funding fee. We didn't talk about that.
Exemption for the funding fee. It typically, if your disability is like 10% or more, you're exempt from it, and that's also where the certificate of eligibility will tell you if you're exempt for the funding fee. So yeah. I mean,
so disability meaning VA disability, not Social Security disability.
Correct.
So VA
disabled
veteran, VA disability doesn't mean you can't work. Just means you were injured in the line of your job serving in the military.
They deem you're 10% or more. Then that's waived. So
that's waived every time you use it. No matter what. Okay.
Correct.
And that's on the certificate of eligibility.
And that sometimes people don't like the funding fee. So if you're actually a disabled vet, then there is no funding fee. So it's even a better loan then.
Good to know. Yeah, and also because of the way the VA loans, they use that funding fee to put into the VA program, right? So that they can loan more money to the veterans for more houses, and where was I going with that? The exemption.
It's to fund the VA program.
It's to fund the loan program. It's amazing, and so it doesn't just disappear and go into thin air. It's like the whole.
So you're putting into it so you could get these awesome program with zero down. So, even though sometimes it seems a little bit expensive, but at the end of the day, when you're looking at do minimal down and paying mortgage insurance. Mortgage insurance is going to cost you a lot more than what that funding fee is.
That's what I was going to say, mortgage insurance. So the VA loan has no mortgage insurance because they've really made a great system that's worked for a lot of years. It hasn't collapsed.
No, it has
nobody's dipped into the pot. It's really working.
Yeah,
it's really a good program that they've created. So mortgage insurance, there's no mortgage insurance on VA loans, but it's because there's that funding fee that the government is guaranteeing these loans. They're a great product.
Yeah.
And isn't there only a handful of servicing companies that buy these that take care of these loans?
No, I mean there's, I'm not really sure about that.
Okay.
I wish I could answer that, but I can't.
Okay.
But
no.
Maybe someone on.
Hey, I'd rather you say I don't know. Yeah, I do that too. I'm like, I don't know, but I'll find out. I do not know that answer. Awesome. Anything else that?
You know what? We're talking about like listing agents, and I've seen a lot of agents when it doesn't show that they accept VA buyers. I've had buyer's agent call the listing agents like, why can't
always?
You
I always do.
And a lot of times they're like,
they just don't know. Or even FHA. They do that with FHA and VA loans. VA mostly, but all kinds of loans. And as a buyer's agent, always call anyway. And if you are not confident enough in your knowledge of the program, have your lender have that conversation with the listing agent, because they will get them to understand more. And make sure you choose a lender that really is versed in the VA program or any program.
But bottom line is, they've served our country, they've made sacrifices, and we as professionals need to fight for them. So if it seems like, why can't they take a VA, let's find out why and fight for them, especially if it's the home they really like. Yeah. I mean, there typically isn't really a reason why they can't.
Honestly, every time I've called as a buyer's agent to ask, will you, and submit it, and I usually submit it anyway, I cannot remember one time in 15 years that they haven't considered it. Maybe I got beat out by another offer if it was during a time we had craziness going on, but they still considered it. Just do it anyway as a buyer's agent.
And another tip is, the only thing that's maybe stopping the deal from going through is the seller doesn't want to give them that lender credit to help the non-allowables. Then, the lender could help with that also. Lender could cover those fees.
It's not a deal breaker.
So if that's something that's stopping from our military people from getting that home they want, then, call your lenders like, look, I can't get any closing costs. Can you help pay, the non-allowables? And, sometimes you got to build it into the rate, but it shouldn't be that much higher anyway. But if it gets them in the home, then why not help them? So there's different ways to make things work. It just, if you're not sure how to negotiate things, then, talk to your broker, talk to another that's really familiar, and they could help you kind of walk through it and how to kind of get that deal put together.
Yeah, and guys, there's this, our local chapter of our Veterans Association of Real Estate Professionals, VAREP is what we use a lot of jargon, so I want to make sure that people are always like, what are you doing? So that is our local chapter. There are chapters around the country. There are classes you can take to educate yourselves. That's lenders, realtors, anybody really. Home warranty, title people, anybody that wants to learn. It's very, very beneficial, and I can give you some more information on that as well.
It's a great class. You get CE credits, right? You get CE credits on it. Plus, it gets you typically, they have specials where your 1-year membership for VA Rep is also included. So it's just spending a day learning about VA loans. And, you definitely get benefit out of it. And, kind of sharpening your skills more as a realtor lender and how to help our veterans.
Yeah, plus we did cool things like the Christmas delivery. We had the police, the fire,
Santa
Claus. We build houses for veterans, and we give away a house like once a year or more.
I think they gave away maybe at least a couple last year.
I mean,
mortgage-free home to the vet.
Yeah.
So
pretty cool stuff. And so anyways, guys, if you're, like I say, a realtor or a lender or in the real estate profession and want more information on these classes, let us know. There is one coming up. I think it's January 20th or 22nd. I'll put the link in the comments. But if you are or know someone that is served in the military that wants more information, reach out to us. Even if you're not in Vegas, we know people around the country. We can refer you out to someone else. And just choose someone that knows what they're talking about, or that can direct you in the right way. So, Steve, you're awesome.
No,
Thank you
so much.
I appreciate you taking the time out of your
Hopefully
day. This
some good
view,
information.
look at this view. He's got a view of almost downtown Summerlin. This
Charleston.
is like amazing. Yeah, nice office. All right, my friends, if you have any questions, put it in the comments below. We'll talk soon. Thank
Bye.
you.
Thank you.